Yesterday, there was a revision in the top three global economies in terms of the nominal GDP. Germany entered the world's three largest economies. Meanwhile, China's markets are still closed for the New Year holiday. Friday promised a quiet reading in Europe. However, unexpected economic data showed up and dealt a painful blow to the top global economy. Following a downbeat retail sales report from the United States today, markets compare US consumer activity with a similar report from the UK. Retail sales in the UK increased by 3.4% in January, and the reading was beyond expectations for a 1.5% growth. Moreover, the latest score is the strongest since April 2021. On the contrary, retail sales in the United States fell more than expected. The main disappointment was dismal sales at the car dealerships and the gas stations. It means that Americans brought favor new cars. Fallen oil prices completed the picture. On the other hand, the rally in oil prices at the beginning of the year poses a threat to price stability. Perhaps for this reason, the central banks in the United States and Europe hesitate to determine the timeline for rate cuts. For instance, Atlanta Fed President Raphael Bostic said this week that despite progress in the Fed's struggle against inflation, he is not ready to advocate for monetary easing amid ongoing risks. At the same time, his colleague from Chicago, Austin Cosby, voiced concern about waiting too long until the Federal Reserve eventually lowers interest rates. Likewise, policymakers in the ECB also come up with different viewpoints. For example, in her remarks today, Isabel Schnabel from the ECB Executive Board called on the regulator to act cautiously and not to fine-tune monetary policy too promptly. In contrast, François Villeroy sees several compelling reasons why the ECB should not delay the first rate cut this year. The retail sales data released yesterday was bearish for the US dollar. However, its index rebounded to 104.40 in the New York pre-market on Friday. The US currency was on a track to its weekly growth for the second week straight, advocating against all six rival currencies, the euro in particular. Suddenly, red-hot economic data pushed the US dollar index up to the area of 104.55 and 104.76. So the greenback is sure to close the week with gains. The main catalyst for the US dollar's rally is a report on the US factory inflation. The producer price index records a product's price for final demand. The PPI in January stands at the highest mark in the last 5 months, and the index jumped to 0.3% from a fall to minus 0.1% in December. It means that inflation in the United States is unwilling to up away, and the cost of services increased by 0.6% in January and also showed a record increase since July last year. That's the risks that Raphael Bostic mentioned have already propped up. By the way, a very important indicator of economic conditions is the housing construction sector. For this reason, the Federal Reserve monitors building permits very closely. In the first months of 2024, the number dropped by 1.5% and was much less than the market consensus of 1.509 million. Judging by the dynamic in the currency market, dollar bulls have priced in accelerating factory inflation, but neglected weaker building permits. The euro-dollar pair responded accordingly. The economic calendar for the eurozone is empty today, and the instrument first plunged to 1.0735. Later on, the euro recovered to 1.0755 during the greenback's retracement. And still, the US dollar is setting the tone for the instrument. Due to the bearish impulse in the euro, the currency pair might close on a Friday at support around 1.0724 and 1.0695. technical resistance levels are located at 1.0799 and 1.0856, but this scenario is hardly realistic today. The oil market has been on a roller coaster in recent days. Following a rapid rally amid the US dollar's weakness, oil lost ground again. As soon as the oil prices climbed to critical resistance, they went down. Brent crude was trading in a wide corridor between $81 and $83 a barrel. It seems that Brent could not manage to surpass $83. On a late Friday, Brent price perked up steam, so the benchmark rate is on a track to weekly gains for the second week in a row, and the rally is driven by geopolitical jitters in the Middle East and efforts of OPEC and its allies to curb crude supplies. You have watched the market review by InstaForex analysts for Friday, February 16. Subscribe to InstaForex TV channel and we keep you updated on recent market developments. Don't miss our videos. Your feedback is appreciated. We wish you have a nice weekend and see you online next week.